Hey guys, this is Erica Jackson with Realty One Group Elite. I am so excited because today I have one of my favorite lenders. His name is Chris Ruiz.
Hey.
Chris is based in Walnut Creek and he works with Supreme Lending. So Chris, tell me a little bit about yourself. Like, when did you start working in the mortgage industry and what has kept you in this industry right now?
Sure. Well, Erica, thanks for having me on this chat. I'm super thrilled to be with you as a dear friend of mine and partner of mine. So I've been in lending since 2015. I got licensed in 2017 after following my mentor and who's a top producer, and he showed me the ins and outs of this business. And so by 2017, on April 1st of all days, not an April Fool's joke, but on April 1st, 2017, I went 100% commissioned as a loan officer, and I have been ever since. And so I got into the business by a draw of a luck, if you will. Someone had met me at a prior industry and said, "Hey, you would be good. You're great with people, and I can see you enjoy numbers, and so you might consider the mortgage industry." And then I jogged back my memory. When I was, maybe like 10 or 13, I have an uncle in Southern California who's, very, very wealthy, very successful through real estate. He's a broker. He has probably maybe like 100 plus agents on his team. And
Wow.
He always had told me in family gatherings and what have you, that whatever you do, when you finally get done messing around, get involved in real estate, whether it's on selling homes, financing them, or escrow and title, but get involved in real estate. And that always was lingering in the back of my mind. And then fast forward 2015, this opportunity fell into my lap.
I love it. Oh my gosh. So welcome. We are all a part of the 100% commission world right now. And honestly, it's just, I mean, I don't know if you've experienced this, but the lives that we've helped to impact, I know that some of the clients that you and I have worked together with, I mean, we've set the tone for some of these clients to build generational wealth for their families. I know we just had a family that you and I closed on that was buying a multi-unit. Yep. And now they're purchasing a lot, and now they're moving on now to selling one of their homes within their family portfolio. So there's just it's so cool to see, right? The lives that not only we're impacting, but just the doors that we're opening for people. And so I appreciate you. You have been amazing with partnering with clients, and I 100% value our partnership.
Thank you, Eric. I appreciate those kind words. I appreciate you and value you, and I'm super thankful. I couldn't agree with you more. The value we've been able to add in some of these people's lives, because we get started because of the commission, but it's way bigger than that when you truly have a heart for people and you know what's going to happen to their family lineage 10, 20 years from now because of the opportunity that you found for them now. So yeah.
That's right. That's right. Wonderful. Chris, I don't know if you know this, but you are like the speedy lender. Okay. Like I tell all of my clients, he's always super responsive. I don't know how you manage it because I know you have a large profile of clients, but you're super responsive. And I know that if there's something urgent, I know you're on it. I know you're taking care of it.
Thank you. I'm considered so millennial. I'm right there, born in '89. So, this is what I know is the internet is smartphone.
True.
Is quick this is my life is on my phone.
Look, so, I'm like, this is me right here.
Right. So yeah. So anyways, I appreciate the kind word.
Awesome. Okay. So Chris, right now, let's see, it's 2024, right? We're in 2 weeks into 2024, almost 3 weeks in.
Yeah.
What is the product that you are most excited about right now?
Easy. Hands down, it's got to be the CalHFA Dream for All program. So this program obviously it had a love-hate, relationship with it last year. I had with it last year because this program was the first in its kind, and the state was providing a 20% down payment to first-time buyers, repaid in the future whenever you did a second refinance or sold the house. So that 20% would be paid back plus a portion of your equity. But the pros outweighed the cons. And so the money ran out, literally $300 million ran out in about 12 days. And that program was, here one day, gone the next last year. Thankfully, I was lucky enough to help 14 families with that program, a small percentage of how many people I had pre-approved. So the state of California saw the demand for this program that, hey, housing affordability is a serious thing here in California, or the lack thereof. And so they've relaunched the program. It's coming out now the first part of April. And we just got word of the final guidelines yesterday.
So for those that are following or not following the Dream for All program, the Dream for All program, they actually will give you 20% down on your home. Okay, so Chris, let's do a quick outline of what this Dream for All program is for first-time home buyers. So number one, you have to be a first-time home buyer. Is that right?
That's right.
20% down. They'll give you 20% down on the home.
Yep.
20% down, that means no PMI. So that's no mortgage insurance that you're paying. Mortgage insurance is what you pay whenever you don't put down 20% down on a home, which most Californians, by the way, cannot put down 20% down on a home, just FYI. Okay. I'm talking to the audience because I know you know that, but it's very hard to do that. So they're going to give you 20% down on the home. It's going to eliminate your mortgage insurance and the timeline. I know with some of these down payment assistance programs, it takes, 30 to 45 days for it to get funded. So how are we looking with the closing on the Dream for All program?
Yeah, so the Dream for All program, the first round, we were closing folks in 15 to 20 days. We had a sense of urgency to want to help as many families as we could possibly. It's just the money ran out. So as long as the client meets the qualifications in advance and speaks to an approved lender with CalHFA, it's standard closing times.
Wonderful. All right. And then Chris, what's the credit score requirement for a Dream for All?
Yeah, absolutely. So would you mind if I share the refreshed guidelines this time around? Because they're pretty.
Yeah, let's go. Yeah, let's do it.
So the refreshed guidelines are that one should be a first-time home buyer. That's checked. And by the way, that CalHFA defines that differently than the rest of the industry. They define that as someone who, as long as they can prove where they've rented the past 3 years. So if you have a rental property out of state somewhere, or you have some ownership in a property from a family trust, they won't hold that against you when qualifying as a first-time home buyer.
Nice.
So that's the first one, first-time home buyer. Here's the big one that they just approved. This just got finalized yesterday. You have to be a first-generation home buyer to tap this money from Dream for All for the Dream for All on the second round of funds. So your parents could not have owned a home in the past 7 yeast. If you came from a foster family, then you're excluded. And or if they did, as long as it's been 7 years prior to you applying, you would be considered a first-generation home buyer. That's a huge one. Knock out a lot. The third change in the guidelines is that it's 20%.
Can I jump real quick on that one? That is huge, right? Because they are specifically funding individuals that don't have a history of home ownership in their past generations. Yep. And, wait, you said first generational though? First
generation home buyer. You have to be the first person in your family essentially buying a home to meet this qualification.
Okay.
You have to be a first generation home buyer, and how CalHFA defines that is that your parents could not have owned a home ever before, or at least in the past 7 years, and they currently don't own a home. That's how they defined a first generation home buyer.
What are the other requirements?
680 credit score or higher. If you're buying in Contra Costa or Alameda County, you have to make under $197,000 per year.
Okay.
Be willing to occupy the property as your primary residence.
Now, when you say under $197,000 a year, is that combined income or is that individual income?
Great question, Erica. Last year it was individual. This year, if you're married, all incomes have to be applied.
Okay.
Yep. So all income in the household that for the people that are applying. So $197,000, Contra Costa, Alameda County. Solano County is a little bit lower. I don't have that exact number handy, but I'm sure it's probably in the mid 100s. You have to be willing to occupy the property as your primary residence. And it has to be a single family home, townhome, condo, no manufactured homes, no mobile homes.
Okay.
Those are the guidelines.
Nice.
Yep. So last kicker to it. Now, this is different from last year as well. This will also, people will have their own perspective on it, for sure, opinion on it, is that they're going to do a lottery system. So they give buyers 90 days to shop for a home versus rushing with their hair on fire, trying to find a house and maybe not have enough time to make a big decision like this on a house, picking a house. Mm-hmm. So they're going to do it per county. And there's a certain number of people that they'll, pull per county. And if your name gets pulled, you get the voucher. You have a voucher to go out and shop for 90 days with your realtor partner. And that's when it's going to be really
important. That's nice.
Work closely with them and find a house and close escrow within 90 days.
Oh, wow. That's beautiful. That's beautiful.
If you're not in contract within those 90 days, you lose that voucher. It goes back to somebody else.
Yeah, because last time they rolled the program out, like Chris said, everyone was rushing to try to find a house so that they can use this program. And by the time they went back to the lender, it was like, we're all out of breath and everything from shopping like crazy over the past week. And we're coming to Chris and we're like, hey, is there still money left? Can we still use this program? I think I found the house. Right. And at some point, the lenders had to tell the buyers that there was no money left.
I had 2 people in contract that I had to give that devastating news to.
Imagine you find the house that you love, you think you're going to get this money for this program, and it's by the time you go back to the lender, the funds are already gone. So this is a more organized approach to helping you to use these funds. It's more now you know that you're shopping with a purpose, because you know now that those funds are available for you. You just have to find a home within 90 days.
Yes.
Right. Okay. Wonderful. Well, thanks for sharing that program with us. Now, and the last thing, I think the biggest thing too to mention on this program is that, Chris, tell us again what's happening with the equity share on this program.
Yeah, that's a really big point. Thanks for mentioning that. So again, it's not a free program at all. It's not free. It's 20% or $150,000, whichever is lower, that the state will provide you. That's paid back sometime in the future whenever you sell the house or do a second refinance. So if you do a first refinance, a one-time refinance, they're not going to ask for the money back. You do a second time refinance, that's when they're going to want that money back. So we call those trigger events. Sell the house, do a second refinance, or pay off your first loan. State wants their original 20% back that they gave you. They'll also have to share 20% of the property's capital gain or appreciation from the time they bought to the time of the trigger event. Let's say a property went up $100,000 over 5 years. That's $20,000 that the state's going to be collecting on top of their original $100,000 that they gave you to buy the house. That's the equity share component to it.
Chris, tell me what lending myth that's out there right now that you want to debunk.
Sure. I think the biggest one that I like to debunk, because I personally have experienced this myself, and I've seen a lot of people also that I've helped overcome this, is thinking that you have to have perfect credit to buy a house. It's just not true. It's the furthest from the truth. All of us have a history. So, whether that's good or bad with credit, but a lot of us maybe didn't have someone to guide us with credit, teach us the ins and outs of managing trade lines and being responsible. And so with regards to credit, the minimum score that people need to get into home ownership is 580 with government insured loans like FHA and VA loans. So most people don't realize that. They think they need to have maybe a 700 or 740 or 640. Those scores are ideal. They're more preferred because you'll be offered better loan terms from lenders. But if you are in need to get into a home, or you've been in an uphill battle to get the scores over 600 for whatever reason, or 640, you can get into home ownership and always look at refinancing in the future once you've already got into the house. Yeah, you might have a bit higher interest rate, but you're in home ownership now. Right. You get to write off all that interest and property taxes against your income on your tax returns, and you're in home ownership. And you can, once you've got into home ownership, now it's just a matter of fixing the credit, and you can always go back and refinance. So that's right. That's the biggest thing, is that don't let your scores stop you. Even if you're in the 520s, 540s, I've seen numerous families that I've helped that will come to us. They need some help and some guidance. And we're not credit experts by any stretch of the imagination. We can't convey that to the clients, but we let them know, hey, this is what we recommend. This is what we've seen clients do over the years, is do X, Y, and Z, A, B, C. If you make these moves, make these adjustments, this could potentially help your credit. And lo and behold, it's helped so many of our clients, and not have to go the credit repair route.
We've had people go through credit repair, and it's been good, right? But it is an expense. And, you also need to make sure you're working with the right credit repair folks too, because sometimes they don't actually impact your scores or help you, in the way that you expect them to help you. So we do have people that I know Chris has people that he refers people to. I have people that refer people to, that if we need to go that route, if we need to go credit repair route, then we can definitely link you to some individuals that can help give you some good tips as well on what they would recommend and what they can do to help you improve your credit score. But what we would recommend is, before going that route, talk to a lender first, right? Yes. Talk to someone like Chris first and find out, can you work with my situation? Okay. And my last question. This is about, what do you do for fun that might surprise others?
I love to fish. I don't know if that's fun. It's fun for me. I love to go out outside the Golden Gate and go after salmon or lingcod or halibut. Fishing is my favorite.
Oh, wow. Okay, Chris. So what's the biggest fish that you've caught?
I have caught a sturgeon that was about almost 100 pounds, 7 feet tall, taller than me, that literally almost pulled me in the water, because I'm a pretty thin guy.
Oh my gosh.
Yeah, and I have that picture on my Facebook. So that was the yummiest fish ever. But yeah, that was my biggest fish I caught, was a sturgeon.
That's pretty cool. Wow. I don't even know what a sturgeon looks like. I have to go to your Instagram page and look it up.
It's a giant fish for sure, but it has the very popular caviar in there as well. So that's that.
Oh, okay. All right. Wow. All right. Awesome. Is there anything else, Chris, that you want to leave the people with as we wrap up our segment right now?
Yeah, I'd like to leave one. I was just thinking about one of the questions that I was looking forward to answering about words of inspiration for those looking to buy or sell in this market. And I want to maybe focus that more so to both individuals, that don't let this market deter you or scare you. I'm a big believer of buying with rates that are higher than when rates are lower, because I've done both. I bought in higher rates and purchased at low rates in 2021. And I found that the higher rates, I had so much more leverage. I had so much more opportunity than at the lower rate realm. I had to go above list price. I had to give a seller 60 days rent back, and I had no negotiation power. I had no contingencies. So don't let this market deter you. Right now, we're in January 2024, where rates are hovering around mid sixes to mid sevens. But CNBC took a poll last year that the average American across the country is waiting for a 5.5% rate to buy and sell. So if you're thinking about buying, or if you're thinking about selling, don't wait until 5.5%, because you're going to put yourself in a predicament. I would recommend take these rates as they are what they are. Unfortunately, they're higher than what we've had during the COVID, but they're just a smidge higher than where we were at pre-pandemic. So I would take these and use them to your advantage, because when the tide turns, there'll be no such thing as a seller concession. And especially if you're a first-time buyer, this is a blessing in disguise for you to get it now before rates come down too much. And then you're having to overbid. And a lot of times the lower down payment borrowers have the toughest times getting their offer accepted when there's 10, 15 offers. That's my word.
Yeah, that is, oh my gosh, that is golden advice. One thing I like to tell my clients is that the rates are not permanent.
Right.
They change. And when they change, you can make the adjustments that you need to within your loan product. But the one thing that doesn't change is the purchase price. Whatever you buy the house at, it sticks with you. Yep. So, you want to get the rate, you want to get the homes right now while there's slightly a little bit of a discount going on, because interest rates are higher, right? So you want to get those homes now. There's been reports that the Fed is going to reduce the rates 3 times in 2024.
That's what I've heard. I've heard the same thing you've heard. I watched that press conference from Jerome Powell, the Fed chair, and that's what they're anticipating is 3 rate cuts. Some economists are expecting 6. Time will tell for sure. But the one thing we do know for sure is that inflation has come down. And as inflation continues to come down, that's going to, sooner or later, we're going to see interest rates just follow that trend. That's always been a historical trend. Inflation goes up, rates go up, inflation comes down, rates come down. So Wonderful. It's a matter of time.
Well, thank you, Chris. You're always a wealth of information. I appreciate your time today. And I will post at the end of this video a link for where buyers can locate you and connect with you. If they have more questions, definitely we are both here to help you guys. Would love, love, love to win your business and be able to support you in meeting your real estate goals.
Awesome.
Bye. See you. Bye-bye.